Yo, 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 what's up, guys? It's your boy Gilmar, and today we are going to be talking about how I'm going to fucking quit trading. I fucking hate it. I suck. The stock market is rigged. It's rigged to take my money. That's all it wants to do. You can never win. Fuck big institutions. I suck at trading. I hate it. I never want to see it ever again. Why is it so hard? Alright, we back, baby, after I had my mental breakdown because of trading. Because trading is so fucking hard. That shit is the most difficult thing I've ever done in my life. Trading is fucking hard, bro. It's fucking hard. It's fucking hard. But you see this right here? That's Naruto, baby. You see this right here? That's Naruto himself. I got that boy tatted on me. Tatted on me. And you know what Naruto says? Never giving up. That's my Nindo, my ninja way. I'm never gonna give up at all. I'm always gonna believe in myself that I'm gonna become Hokage in trading. I am not gonna give up, dude. It is what it is. I can fall down 100 times. I can fail trades 100 times, but you never know that 101 trade can change it all. You never know. And I'm still trying to get that 101 trade. I'm still trying to get it. I can fall so many times, but you have to, for stocks, you have to be tenacious. You know, if you're down bad, take a break, recalculate, get your mental correct, because it's all psychology. The stock market is one big brain just testing your psychology. And that's what it is. Only the strong will survive, and the weak will perish. And me, I'm not fucking weak, dude. We're in the trenches right now, and we gonna get out of these trenches. Alright? So with no further ado, let's go ahead and talk about trading. So, let's start off with my Robinhood account. $59.30. Woo! Webull, 58.42. TD Ameritrade, 94.63. Grand total, $212.35. Let's fucking go, baby. We blew up our account. You know, the last video I was like at $454. We blowing up that account. We bleeding money over here, baby. We bleeding money. Yeah, my guts are out bleeding money. That's we bleeding money. We're not making money. We're not in the green. We bleeding money. It is what it is, dog. It is what it is. I'm so disappointed. It is what it is. I remember in November and December I had a stretch. I was just trading one stock, which is AT&T. Maybe I should look back into AT&T. But AT&T is what caused me to have a mental breakdown, because I lost like $4,000 in AT&T. But you know, in 2 months, I was winning every day. It was crazy. I thought I broke through. That's another story. But with no further ado, let's go ahead and talk about my first trade, which was last week. Mind you guys, as a reminder, this is not a day trading channel. This is more of a swing trading channel. This is I got a perfect analogy. This is a 9-to-5 trading channel. I'm a 9-to-5 worker. Technically, I work from 7:30 to 4, but I'm a 9-to-5 worker, and I trade on the side. So I'm a 9-to-5 trader. That's what we are. This channel is for 9-to-5 traders. We do this as a side hustle. But just because we do this as a side hustle does not mean you get to lollygag in, you know, doing your research and studying and all that. You have to treat this as your main job, but as a side hustle. You know what I mean? But you have to be serious about this. So let's go ahead and with my first trade. It's HTZ, Hertz, the car rental company. On May 1st, which is right over here, I bought an HTZ call for $83, expiration 6/10. The strike price was $17.50. $17.50 was the strike price. I bought it at $9.54. Sorry, at $9.54 I bought a second one for the same price, $83. So now I have two of the HTZ calls. And later, at 12:42 p.m., I bought a third HTZ call. Because as you can see right here, let me zoom in. This candlestick, you see it's a red candlestick, so you know the open is up here and it closed down here. So the price action, it went down to the 13 EMA, this yellow line right here. It tested it, so I decided to average down, meaning I bought the same call for a cheaper price. I bought it for $65. The grand total of the three calls was $231. So on May 1st, I attempted to do that trade. The reason I entered this trade is because right here, in my previous videos, we talk about every time the price action, which is the candlesticks, go above the 13 EMA, it means that price is bullish. It's gaining strength. At the time, you know, the RSI, it's above 50. So we got two candlesticks above the 13 EMA. What's that telling us? Price strength. As you can see right here, the MACD crossed, giving it momentum to the upside. Look, the histogram is printing green. The blue line crossed over the orange, telling me that it's going up. You know, and we got the shaft trend right here telling me that the direction is going up. So, like I always said before, I got these indicators to tell me what to trade, and they all have to line up. Price action above the EMA, RSI above 50, MACD cross the orange, it's gaining momentum, shaft trend, directions in my favor. Come on, bro, it's picture perfect, baby, picture perfect. You know, what else more do I want? I'm following the rules. So I sold it this May 1st, and I sold it the next day, May 2nd. All three of them for $129 for a, drum roll, a $102 loss. As soon as I saw that, whew, that shit hurt my soul, bro. That shit hurt my fucking soul. That shit was crazy, bro. Like, $102 hurts. For a small account, that shit fucking hurts. You know, the reason I sold it, look at that, because the price action, let me zoom in right here. Look, the price action, I bought in right here. Price action broke below the 13 EMA and the 48 EMA, I'm sorry, broke below, which is the yellow line. The 48 EMA is the yellow line, and the 13 EMA is the 13. So it broke below, look, this wick right here, this stick, that's the wick. It went all the way down there. So it broke all the way down there. Once I saw that below the 13 EMA, I'm like, bro, I have to get out. I have to protect my capital, dude, because I thought, you know, I'm thinking ahead. You know, this break below the 13 EMA, I'm like, dude, it's, you know, next day it might open below right here, the 13 EMA, and I could potentially lose even more. So I protected my profits. I had to protect my capital, and I sold out. You know, how the fuck am I supposed to? I bought it here and I got faked out the next fucking day. The next day, dude, how am I supposed to know that, bro? How? Like, this is the thing that's frustrating about trading. You can have a plan and you go according to your plan, and the plan does not work out and it fakes you out just like that. And I was only gonna go, my trade was just gonna go to this 200 moving average right here. So from here to 1730, you know, I would have got a nice little chunk of change. Well, not nice, but a decent chunk of change, and it was right there. It was just gonna be, you know, a quick scalp, go in, go out, go in, go out, go in, go out. That's what I was assuming. You know, as you can see, I had the direction in my favor, and next thing you know, I got fucking yeeted, bro. Like, I don't know what to tell you, dude. Like, when that shit happened, dude, like, after I've been losing trades for so long, bro, that shit just hurt my soul. Like, I'm following the plan, and I don't know, dude, it just faked me out. But that's what happens in the stock market, dude. That's what happens. So it is what it is, and that's the HTZ play. That's the HTZ play. So let's go to the next play. It's on May 4th. It's CO, ticker symbol KO, Coca-Cola stock. So on May 4th, I bought Coca-Cola, $64 put, expiration June 2nd for $103. My price target was $63.35. So on May 4th, which was, let's see, where's May 4th? May 9. Technical difficulties right here. Sorry, May 4th, right there. I bought the put there, and my price target was over here, $62.35. So I bought here, and I wanted to go down here. So just like before, in, out, in, out, in, out. The reason I wanted to go to $63.35 is because price action right here. Look, bomb tapped, went up, tapped. Right there, 3 instances where it tapped this level. That's a level that every time the candlestick hits, well, the price action hits, you know, it usually bounces off from. And, you know, clearly it didn't, another trade that didn't go my way. I sold it the next day for $85 for an $18 loss. Come on, bro. The next day, May 5th, right here. May 5th, right there. I bought it here, and you can see the price action going up. Bought it here, price action going up. You know, this the RSI, it's about to get above 50. You know, the buyers are coming in. So I sold. Usually I would wait if open above the EMA line. But I didn't wait. I had like a gut feeling telling me that it has so much strength that it's gonna break above this EMA and form another candlestick above the EMA. And look, I was right. It did form another candlestick above the EMA, and I sold out. To why? Protect my profit. You have to protect, well, not protect your profit, protect your capital. You have to protect your money. You have to protect your money. Yeah, that's my rules. Every time, you know, the price action breaks above, when I'm shorting on a put, if the price action breaks above the EMA, I'm out. You know, if I'm on a call option, and I'm going long, if the price action breaks below the EMA, I'm out, and that's how I protect my capital. So, $18 loss there. Another one bites the dust. What am I gonna do, bro? You know, because I'm following the rules, dude. Like, so, you know, right here the RSI was below 50, meaning bearish. It's going down. The MACD, as you can see, it's under the orange line and it's printing red, meaning that the momentum is going down. The shaft trend right here, red, direction going down. Following the rules. And I followed the rules, and right here, got faked out again. Nothing I can do about it. Nothing at all. Nah, zip. And that's it. It is what it is. And we move on to the next trade. It's for Webull. This one is for Plug Power. So let's go ahead and go to Plug Power. Plug Power right here. Plug Power. This one is for Webull. I bought a Plug Power on May 8th, right here, this candlestick right there. You know, this is a downtrending stock, Plug Power. As you can see, look at that. It's been going down for quite some time. It broke below, you know, right here on February 17th. It's been on a downtrend for a long time. But look, this is just an example of my reasoning of buying, or you know, of going long or going short. So for example, look, if you would have entered below the 13 EMA and the 48 EMA, look how long this play would have been, all the way until it bottomed out and broke above right here. That would have been a disgusting gain. Yeah, but just showing you guys an example. So I bought a Plug Power call, $10 strike, expiration May 23 for $60, and I sold it again on the same day for $63, a $3 gain. Let's fucking go. We getting this money, baby. I made $3. Day before I lost 18. Day before we lost 102. I made 3 today. We broke even. Yeah, fucking right, bro. $3. This is what has been happening. I've been making like $3, $5, lose 50. I make 10, make 15, lose 100. I suck at trading. I suck at trading. It is what it is, bro. So, next trade again. It's still Plug Power for Robinhood. I bought a Plug Power $10 call, expiration 5/26 on May 8th. Same candlestick. So I bought the one for Webull and one for Plug Power on the same day. Reason being I bought it is because you can see it's been on a downtrend, and then look, price action broke above the 13 EMA. You know, right here it crossed above. You can barely see, but at the time it showed a little bit more strength. But it crossed above the MACD, giving the direction is in my favor going up, and you can see the histogram right here printing green, and the shaft trend direction was in my favor going up. So I waited an extra day for more confirmation of price strength. So a candlestick broke above the 13 EMA. I waited for the next day till it clearly opened above the 13 EMA, so I can have that extra confidence that it's going up. And my price target was from here to here, 1016. You know, that right there is a level of resistance. If price action went right here up to here, since that's a level of resistance, you know, the price action would have been hovering there until it breaks above it. But that was my reasoning for buying this play. So I bought this for $70. The price target was 1018, and then I sold it the next day, baby, for a big juicy loss. Big juicy loss. I sold it the next day for $22. I bought it for $70, sold it for $22, baby. We lose money. We don't make money around here. We fucking lose money around here. We don't fucking make money, bro. We lose money. We sold it for $22. Reason being, I did not realize it was my fault. It did not fake me out. It was this time. Well, I guess every trade is your fault, but this one was actually my fault. I didn't realize that Plug Power had quarterly earnings. Quarterly earnings is when companies report how much they've made in a quarter. So they reported fucking horrible earnings. They are down negative 35% in sales, dropping the price disgustingly in the pre-market hours. Pre-market is anything before 9:30 when the market opens. So, you know, then the quarterly earnings come out at 8:30 a.m. So at 8:30 a.m. to 9:30, Plug Power was bleeding dry. Could do nothing. I could do nothing about it because I can't trade options until the market opens. So when the market opened, that shit, everybody already took out their money. I got rug pulled. Everybody already took out their money, and that's it. They out of there. So sold it for 22, bought it for 70 for a $48 loss. We lose money around here, baby. Let's go. Nothing to be proud about, bro. Nothing to be proud about. And that has been the conclusion of my 2 weeks of trading. Very good, right? Very good. As you can see, that's why I had my mental breakdown in the beginning of the video, because of the difficulty of trading. And I'm in a play right now, and it's not going according to plan. Another trade that's not going according to plan? Wow. Who would have known? Who would have known? Let's review it. I am in another Coca-Cola play. I am playing this on the daily chart. So let me take you to my TD Ameritrade. So right here, it looks different than what I have on TradingView. On TradingView, I have the 13 EMA, the 48 EMA, and the 200 moving average. I still have the RSI and the MACD, but that one has the shaft trend. This one is another strategy that I use. This is the 9-day moving average and the 180-day moving average. Just two of them with the RSI and the MACD. So it's very similar to the 13 EMA and the 48 EMA. Just works a little bit differently. But yeah, anyways, I'm here in this Coca-Cola play. I entered a 62.50 put for Coca-Cola. I bought for $83. Expiration is June 23rd. I bought it right here. Let me zoom in. So I bought it right here at this this candlestick right there. I bought it right there because Coca-Cola has a support level at 63.31. And this candlestick right here, I waited because look, it broke below the 9 moving average, the 9-day moving average, but I wanted a break below 63.35. That level right there. Look, let me show you for reference of how price action works. Look how that level right there, 63.35. Look how price action hovers around it, came down, hovers around it, came down, hovers around it, supporting around it, came down, supporting around it, going down, da 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 da, still hovering around it, going up, da 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 da, and still hovering around it. So it's a very established support level, 63.35, but there is another one right below it that also price action respects as well. The other level is 63, around 63.12ish. Look how the candlestick went up to that level and came back to it. You can see the wick go down here and the body go back up. Wick right here the next day, go down here, go back up. It's respecting those levels like crazy. Look at that. It's proof of concept. I found those these levels on my TD Ameritrade account. And basically, playing this on the daily chart, this is the play that I'm doing. I am trying, just to ride it down to, the 180 moving average right here to 60.86. Hoping for that. As you can see, it's going on a downtrend. Look at that. The MACD crossed, the blue line crossed the yellow, and once that happens and the histogram is printing red, the direction is going down. When price action goes below the 9-day moving average, it's bearish. When it goes above it, as you can see, it's bullish. When it goes below it, it's bearish. That's how it works. And you know, sometimes there's fake outs and stuff like that. But also there's a resistance level right here at 64.35. That up to there is my risk. If probably if it breaks above, I'm kind of breaking my rules, because if it right here today as of May 12th, the price action broke above the 9-day moving average, but it's been, look how it's been trading in this super tight range. So there's a resistance level at 64.35 ish, around there. If it breaks above that, that's when most likely I will sell out. So I haven't sold out because it hasn't broke above that level. It can, you know, tap it and then come back down, and still probably trying to break this support. So we're just gonna wait it out. Their expiration date's June 23rd, so I have some time in the play to develop. I bought some time so it can develop, and I'm gonna let it ride. I'm gonna see how it is. I did some very thorough technical analysis, and dude, I want this trade to win, bro. I want this trade to win. So I've been hyper focusing on Coca-Cola. You know, as you know, it would have been probably better if I would have bought below right here, like at 62.89. So I would have had a clear confirmation breaking below these two levels of 63.11 and 63.30. It would have been better if I would have bought right here, confirming even further that it's a downtrend. But it is what it is. I front run my play a little bit. I wanted to get a good entry point, because that's, you know, trading, that's what it is. You have to have a good entry point and a good exit point. Sometimes you don't get a good entry point, sometimes you do, and I wanted to get a good one. So you know the RSI, it's below 50. Well, actually it's at 54, so, but still it's at fair value. You know, the MACD is going down. You know, price action is below the 9-day moving average. I thought I had a good entry, and then, you know, it kind of faked me out there. So we'll see, you know, in the next video how this play develops. But that has been my disaster of 2 weeks of trading. How do you guys like it, right? Very good, huh? Very good. I don't know, bro. Trading is very hard, but it doesn't matter, because this is gonna be one of the most legendary challenges, from 400, well now 200 to 25,000, and we're gonna keep posting until I make that 25,000. This is my commitment to you guys. To you guys and to myself, because that's when I will truly know that I'm a profitable trader, and I'm not going to give up. This is going to be a truly legendary series. I'm going to be filming my whole entire success, literally coming from the trenches all the way to glory. And I'm going to document everything, and you guys are going to see how a, you know, mediocre trader like me can become a profitable expert trader in the future. I believe in you guys, and I believe in myself. So that wraps up my video. Thank you guys so much. Please hit that like, hit that subscribe, hit that notification bell for part 5 coming soon. Might be next week or the other week. I don't know. I'm a swing trader, so we'll see. Hopefully I don't blow up my account by then. Until next time, guys. Peace. Namaste.